The price of U.S. oil has fallen to a level not seen since 1999, as demand dries up and storage runs out. The price of a barrel of West Texas Intermediate, WTI, the benchmark for U.S. oil, dropped 19.3% to. It hasn't taken long for the market to recognize that the OPEC Plus deal will not, in its present form, be enough to balance oil markets, said Stephen Innes, chief global market strategist at Akhtar. The leading exporters, OPEC and allies such as Russia, have already agreed to cut production by a record amount. In the United States and elsewhere, oil-producing businesses have made commercial decisions to cut output. But still the world has more crude oil than it can use. And it's not just about whether we can use it. It's also about whether we can store it until the lockdowns are eased enough to generate some additional demand for oil products. Capacity is filling fast on land and at sea. As that process continues, it's likely to bear down further on prices. It will take a recovery in demand to really turn the market round, and that will depend on how the health crisis unfolds. There will be further supply cuts as private sector producers respond to the low prices, but it's hard to see that being on a sufficient scale to have a fun day. Traders will be keen to offload those holdings to avoid having to take delivery of the oil and incurring storage costs. Brent oil, the benchmark used by Europe and the rest of the world, was also weaker, down 2.6% to $27.35 a barrel.